Hello, traders. It's Sunday evening, June 12th. I thought I would do a video, take a look at what's going to be happening this week. We got the FOMC statement coming out Wednesday. We've had some market weakness. I'm going to get to that in just a bit. Let's take a look at my pick Friday. I put the video out before the open. CLF, Cleveland Cliffs, was the short of the day. You can see here how the stock gapped down. As I mentioned in my comments, no reason to rush into any trades. The market was going to open lower on Friday. Patiently wait. You could see how the stock was not able to fill the gap. After about 35 minutes or so, you've got an opportunity to short. You can see how the stock gradually drifted lower. S&P futures right now, Sunday evening, are open. They're indicated about 35 points lower, so we're going to get a weak open tomorrow morning. CLF should be weak also. I think this is going to be a really nice trade. So let's talk a little bit about the market and what I see shaping up here. We'll go into the SPY. Take a look at the daily chart. That's always where we want to start our analysis. You can see that the market's had a habit of gapping lower, and you get some momentum out of one trading range, and then you compress and you form another trading range. You can see the highs there, the lows there, back and forth. Very difficult swing trading environment. Up 60 points one day, down 60 points the next. And then eventually you get your next transition from this trading range to a new trading range. Heavy volume for about 3 or 4 days, and then you compress. Then we get a really nice rally off of this low, bullish hammer. 1, 2, 3 really big days through this horizontal resistance. And now we're into another trading range. Now we've got another big move back down to this trading range. That's been the pattern that we've seen. So what's my best guess as far as what the market's going to do? I suspect with the FOMC meeting coming up and the statement on Wednesday, we're probably going to see some nervous jitters. So tomorrow is indicated to open lower, probably going to be testing these lows. I would expect to see another low and then a compression in a new range down here, probably with 385 marking the high end of that range, maybe somewhere around 375 being the low end of that range. Again, this is just based on what the previous patterns have been. You can see that the market in general has been very weak and very choppy. Yes, everyone's waiting for the FOMC statement. In all likelihood, it's going to be a 50 basis point rate hike. They are also going to pave the way for a 50 basis point rate hike in July. Now, you would think that, yes, we're just waiting for these FOMC statements, but in reality, what's happening is asset managers are not going to stick their neck out until they see how these interest rate hikes have impacted economic growth. And while they wait for 2, 3, 4 months, they're going to be keeping a very careful eye on the jobs numbers. The jobs reports have been pretty good. The ISM numbers have been drifting lower. So the purchasing manager surveys are showing that economic growth is still stable, but decelerating. So hopefully those numbers, those economic data points, are not going to fall apart in the next 3 months. If they do, then the fear is going to be that we're heading into a recession and we'll see another wave of selling in the market. If we can get through September, October, and economic conditions remain stable and the Fed starts to see some signs that inflation is starting to abate, we could get a nice fall rally. So right now we just have to go with the flow. I'm not swing trading. I am day trading. I'm finding opportunities intraday. I think we're going to have still some room to the downside before that Wednesday FOMC statement. So we're going to be looking for trades on the short side. And we'll go through one search only, Royal Flush Bear. What does this mean? This means that we have a sell signal across multiple time frames, everything from a 15-minute to a daily basis. These stocks are very, very weak. You can also see on a 5, 15, and 30-minute basis in the Option Stalker platform that these stocks are also on a sell signal. If I click Market Signals, you can see that the S&P 500 daily, 2-hour, 1-hour, it is bearish across all time frames. QQQ bearish across all time frames. So market first, market first, market first. That means that we need to be focusing on the short side. As I click through these charts, there are some really good looking shorts. Google, upward sloping trend line, breach to the downside. Adobe could be in the running for my short pick of the day. Upward sloping trend line, breach to the downside, 50-day moving average right there. I like Adobe. I think this is a good short. Not going to be my pick though. Shop, nah, nothing going there. Tesla looks like could be a little bit of a bearish flag formation. GS, Goldman Sachs, look at banks get nailed. Upward sloping trend line, breach to the downside, bearish flag formation. In general, financial stocks are very, very choppy. So I would expect some retracement just because it's a financial stock. What is this telling us? I had this question in the chat room. Hey, Pete, when interest rates are rising, isn't that good for financial stocks? Isn't that good for banks? Isn't this when they can actually make some money? If so, why are they selling off? Well, they're selling off because fear of a recession is on the rise. If we do go into a recession, that's not going to be good for job growth. That means that the bad loans are going to increase in number. Credit concerns could surface. That's why you're seeing financial stocks sell off, even though interest rates are expected to go higher. Follow the smart money. Smart money right now is very cautious on financials. So this is not a particularly great breakdown as far as the overall market is concerned. It's a little bit unnerving. So we see that in many other financial stocks also as I continue to go down the list. JP Morgan Chase, another bank. WFC got nailed hard. Morgan Stanley down here. You can see upward sloping trend line, breach to the downside, really close to that 52-week low. Not a good sign. So lots of weakness in the financial sector. Yes, those could make good shorts, but as I mentioned earlier, you can see here's a nice little sell-off here, and everything looks like it's going just great, and then boing, you get this bounce in here. Well, we don't want to deal with anything like that. You can see how choppy these stocks tend to be. I do have a nice short. MMM was a nice short also. You can see major horizontal support, breach to the downside. That's nice. One that I'm going to focus on is letter U, and I'll show you why. We had this really nice steady decline in the stock, earnings after the close, and a big drop. Typically, stocks are going to bounce a little bit in here after a big drop like that and a big sell-off. This stock could not get off the deck. The best way for me to demonstrate that is S&P 500. So you get the big drop in the stock right here. Market also drops. And look what happened to the stock. Got flat price action, but look what happened to the market. Big rally. This stock did not participate at all. That tells me that sellers, whap, 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 are still close at hand. Now we have this nice little upward sloping trend line right here. Many, many touches and a breakdown on Friday. So yes, the relative weakness is starting to build. You can see it right here on the D1 basis. And let's take a look at that 15-minute chart. And you'll also be able to see that, yes, early in the day it had lots of weakness, and then it just kind of compressed. Another question that came up was, hey, Pete, I had a bunch of stocks that looked like great shorts on Friday. Market sold off, and then they just compressed. Well, that's what the market did. We had a gap and go formation, and you can see how Friday the S&P 500 fell. Then we had some follow-through selling, and then the rest of the day, it was absolutely pancake flat. Not a great trading environment for day trades. Tomorrow, what we would like to see, we're going to have another gap lower. We would like to see a bounce. We'd like to see that bounce stall out before it fills in the gap. We want to see lots of overlap in the candles. We want to see a mix of red and green candles. That would tell us that the trend is weak on that bounce. And then eventually We want that bounce to stall out before it fills the gap, and then we want to start seeing the market roll over. When you see that, what you'd like to see in the letter U is stock can't get off the deck. So if U opens lower, we want it to continue to stay on the low of the day, low of the day, low of the day, while the market tries to bounce. Then when the market bounce stalls out, we want to see U falter quickly. That would be a sign of relative weakness. That would be a sign that it's time to enter that trade. In general, here's what's going to happen the first 3 days of the week. We're heading into the FOMC statement. Traders are going to be squaring up. After Monday, so Tuesday and Wednesday, the action is going to be absolutely dead. There's not going to be a whole lot of anything going on. Traders are simply going to wait for that FOMC statement, and then all hell will break loose after the statement and for the rest of the week, because we do have triple witching. So that's going to add volatility to the market. So tomorrow, you'll have an opportunity early to get short. If the market falls apart and it continues to drift lower and we get another one of those gap and go formations, I would not chase the market and I would not be shorting, because the chance is that that move is going to run its course very, very quickly, and then we compress for the next 2 days after that. The best opportunity is going to be a drop, a small bounce, gap remains open, mixed candles with overlap, and then we start to roll over. That would be a good shorting opportunity. So those are the things that you should watch for when you're looking for a trade tomorrow morning. If you happen to be short CLF and you held it overnight, get a nice big market drop tomorrow, get a nice big drop in the stock early, take gains. This is a hit and run market. Swing trading extremely difficult right now. So you should focus primarily on day trading. Since we're focusing on day trading, we need to have the right backdrop. We need to have the right scenario. We need to get that little bit of a bounce early. That bounce is going to tell us if the letter U is weak relative to the market. Market rallies, U flat, market starts to roll over, U new low of the day, boom, you got an excellent short setup. Good luck with your trading. I'll post a video in a couple of days. Wait for that FOMC statement. Look for dead trading Tuesday and Wednesday. I might not be able to do my next video until Thursday. Good luck. We'll see you then.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.